What happens if you have bought assets, for example, in this year, the thing that people are talking a lot about is cryptocurrencies, and you leave partway through the year or at the start of this year and you end up selling, say, later on in the year? What is the consequence of that? Can you get away without paying tax? In particular, today we're going to answer that question for UK, although some of the principles are similar for a bunch of countries. If you're in another country, please reach out to me. We can discuss it, see how it applies to you. But we're going to talk today about UK because I've been talking to a lot of people from UK lately about leaving the country, about being able to cash out on their gains, etc. So let's dive into this subject. Before we do, if you haven't already, please hit the subscribe button, hit the notification bell, get reminded of all of our future videos. Don't miss out on any of them. And if you're at all interested in international living, international business, international structuring, we help you figure out what is the best solution for you, what is the best structure, et cetera, and then we help you to implement that solution. So you can book a call with me, clarity.fm/Michael Rosmer. There's a link in the description below, or you can visit our websites, offshorecitizen.net, offshorecapitalist.com, and you can send us a message through either of those. Okay, let's dive into it. So basically, UK is quite a wonderful place because they don't really have an exit tax. Now, inheritance tax is a little bit tougher to deal with, so we're not going to talk about that in this particular video. But if you were, for example, in Canada and you left the country, when you leave, you pay an exit tax, which basically is a deemed disposition of your assets. So what I'm going to mention here about UK does not apply to some place like Canada. The US has a $2 million threshold. Various different countries have other rules. But one of the cool things in UK is you could live there for a bunch of time, you could amass a bunch of assets, and you could leave the country, and then you could cash out on those assets and potentially avoid the tax if certain things are true. So how does that work? So let's say, just for instance, that you bought a bunch of cryptocurrency in 2019, okay? Let's say you did the best possible thing, which is September 1st, 2019, you bought a whole bunch of Aave. It went up 200x between then and September 2020, and it's gone up more since then, and you're feeling pretty good about yourself, okay? But then you take a look and you think, shit, I'm gonna be hit with a brutal tax bill here. This is terrible. Now we're coming up on the start of the UK tax year, which is April. It's gonna be April 6th. And so you say, oh look, I'd like to leave. But maybe you can't get all your affairs together on time, or maybe you're not sure because you think, hey, well, I did buy these assets while I was a UK tax resident. So when I cash them out, am I gonna be in trouble? Not necessarily. Very, very good situation. So I did a previous video, which you can check out, or maybe it's been posted in the next couple days, whatever it is, on becoming UK non-resident. That's a whole other conversation. That's very important. But what would you do? So you could leave UK. You actually could, let's say, we're in 2021. Let's say, there's like a big bull run that goes until September and you sell out of your assets in September, okay? So you sell all this cryptocurrency. Let's say by that point in time, your 200x gains have gone up to 1,000x gains, okay? So you put in 10 grand, you've got 10 million, and this feels pretty good. Are you taxable? Potentially not, but potentially yes. Because you're a non-resident of UK, you're not taxable on capital gains during the time when you're a non-resident. And that's not based on when you buy, that's based on when you sell. The exception to that is if you have like UK real property, okay? So if you have, let's say you're owning a house in UK, if you sell that, it's still UK taxable income. But in the case of say cryptocurrency, stocks, etc., no. Now, the better part though, or the more concerning part, I guess, is that's only true if you stay out of the country for 5 years, okay? If it turns out that you go back, if you can't just move out of the country for a year, cash out and then move back. That doesn't work. By the way, you have to genuinely become non-resident. It doesn't mean that you can say, hey, I'm gonna leave everything in UK, I'm gonna go traveling for a year, cash out and come back. No, it doesn't work that way. You can't even go traveling, really for 5 years, likely, and come back. Without some difficulty. I guess you could qualify in theory if you did it, if it was in the right period of time. Anyway, so what you would instead have to do is you'd have to make a 5-year commitment, okay? You'd have to basically say, okay, I'm gonna only go back on visits, but I'm willing to live abroad for 5 years. And then after 5 years, if I choose to, I can still go back and now I'm going to be tax-free. So anyway, that's the answer to the question of whether you can avoid the capital gains tax on the sale of assets that you purchased before you left and then sold after you left? The answer is yes, provided that A, you're genuinely non-resident when you sell, and they're not real property from UK, and you're in a situation where you stay non-resident for 5 years. So I hope that helps. If you have any questions, please reach out to me. Again, you can book a call at corday.fm/Michael Rosmer. There's a link below. If you don't like, or if you have questions, you can also put them in the description or the comments below. If you like the video, give it a thumbs up. If not, please tell me why. And I'm going to look forward to seeing you guys on the next video.